Hey, good morning, everybody. This is the professor with Day Trading for Success. Today is a Sunday. I'm going to be making a couple of announcements today, and I wanted to get your guys' opinions on some new scripts I just helped correct for the $1 Million Margin Club. And then also I'm going to be showing you the inside pages and my opinion and how I trade Day Trading Volume 4, and then the companion book, which has the 5th strategy. Day Trading Volume 4 has the 4th strategy. So that's what this video is going to be about. And first, I'm going to start showing you this layout. I will make this available for this video. It will not have these custom scripts on it unless you already have the scalping indicator, which is available for free on this YouTube channel right now, so you should be able to get that no problem. But these new ones aren't really officially out yet, that I've just been working on, and now they're all licensed. They're getting all licensed and everything else. So, but they're pretty exciting, I think, and I'm asking for your guys' opinion to see if this is something we should move forward with, or other things you might like to see on these scripts. Please read this disclaimer. I will not be doing any trading demonstrations today, but keep in mind that this is an entertainment channel, so you shouldn't try to emulate any of the trading styles on this without speaking to a licensed professional. So this is obviously we're stop dead here on the weekend. But this is this is my most profitable layout to date, because I'm also use it to do swing trading. I have multiple screens around me, so when you see the video demonstrations that I record and make available, you're not actually seeing everything I'm doing. So I've been using this on my swing trading as well, and I've been doing really, really well, more than what you've seen me make, combined with my trading the RV strategy or the open strategy. So yeah, it's been a good year so far, and hoping to stay that way. And so hopefully you guys are all doing well out there. Again, I'd like to thank you for all the comments I get. I never get tired of praise. But I mean that I'm hearing how well so many of you are doing trading the RV strategy, and now I'm starting to hear lots and lots are doing well trading the new open strategies that we're showing here. I really haven't doubled down on too many other strategies. I do think that when you learn the concepts of either the open or the RV strategy, you can kind of use that type of trading with just about anything that you do. So you'll get kind of a feeling on all types of trading strategies. But we are actively looking for other strategies that aren't shamelessly promoting just a channel and aren't actually showing it being traded. But you know, if it seems like it's a viable strategy, then we would trade it. You know, we would show it here. And so if you guys know of some that you're using that are good, please pass them along so I can show them here for everybody, and we can take it apart, and we can do video demonstrations, and we can, you know, hopefully people can make money on other strategies too. Now I know there's one out there. Don't hit me with the biggest trader online is the momentum trader. I won't say his name, but we all know he's amazing, and he just buys high and sells higher, and he's got all the gear and charges all the money, and he's the big boy around the block. I'm not going to show I trade that type of strategy as well on Lightspeed. I don't do it on Thinkorswim. So don't send me bunches and bunches of them trying to, you know, with that strategy, which it isn't really a name. It's just kind of like buy the dip or momentum strategy as a whole. And he's very, very good, and have nothing bad to say about. Everybody has a right to make a living, and how he's promoting himself is, you know, it's pretty. I think he's fairly high quality. So I'm not going to show that because you guys can see that elsewhere. But you know, that's a whole different style of trading now. A lot of people, that's not for them. That really, really fast, where you can just lose so much money so quickly. It's an art, you know. So they're looking for things like the RV strategy, which is the large cap. Very slow. It can be fast if you want it to be, but I mean, it's very slow, methodical, waiting for support and resistance levels and Fibonacci levels, and, you know, holding longer if you want, or on wider channels. And so that's in Day Trading Volume 1. As always, there's a link for that here. and then learning your patterns. There's a link for the candlestick pattern playbook, but that's not the star of our show today. Today I'm going to be talking about day trading volume 4, which is the open strategy. But let's get right into this layout and these custom scripts that you've probably already noticed. Now I did show, this is a 1 minute chart. This is the scalping indicator that's, like I said, available on this channel. That's very, very, very popular. The green lines are the buyers, the red lines are the sellers, the blue column is the overall volume. So it's actually showing you the sentiment within each volume column here, as well as what the percentage is at any given moment, and then the last candle's closing and the current candle closing. So you can get on a live market, you know, you can get a, how far back am I here? You can get, it'll turn dark black when I'm on the live. There it is. Well, because I have the volume profile here, it's not dark black, but there's the black I was looking for. But you can see when you're reading this with these columns, they'll match. If you don't know by now and you're new to this, this is not edited, not slam, slam, slam in your face. Which you might like that style. I'm just talking. That's it. That's all you're going to get here. But, you know, like if you look at this last candle here, this is the last candle of the open here. Let me just see here. Yeah, see the red line at the top? See how that candle went down? So it's basically forecasting and telling you. This isn't changing here right now. This is showing you the last candle on the pre. So it's hard to show you on a closed market, but this scalping indicator is amazing. It's just absolutely amazing, and it's totally free. And now this just looks like a big mess here, but let me get to where we were here. Just kind of adjust all this so we can talk about the other things on this layout here. So I like to use this. This is a day chart minimized down here, you know, and this has the ATR average true range along with the ADX here, which this is a custom script too with alerts and everything. And then it has my active trader up. It's a little bit wider across here, so I'm not slipping off the buttons when I show you guys. Not a lot of times I trade with hotkeys, but when I'm showing you a demonstration, I use buttons so you can see. Hotkeys are faster. If I'm in competition, I will be using hotkeys for sure. Then I have the level 2, which normally on large cap, you know, this can be deeper if you just pull down this 15-minute chart here, but on large caps, you don't really need the level 2 too much. And then I've got a 15-minute here. Then minimized down here are another 5-minute on a 2-day. So you can see how far back they go by looking at the time frames, right? And then this is a 30-minute here. This is on a 10-day. You can see here, okay? And then I have a 1 hour. This is also on a 10-day. You can see here. Now you can make these a little tighter here, and your time axis is 32, so I can just make that 5. It's going to show now only 5 candles back from the end, right? And then I have a 4 hour here. And, you know, they have various. There's a 200 moving average, the 50, the 100, and then these have various different levels, 20. This is, I think there's a 5 in here, a 20, and a 9 moving average as well. But if you watch these videos, you know that, and I set these, all these up here so I can adjust the chart right up here. But as you know, when you watch the live videos, I'm using this 10-day 5-minute, right, for the Fibonacci levels, right? So I'll click onto the low right here. So that's 13. So there up to here, say, that's 35. So we got to go a little higher there. Oops. And if I can't click it right away, I'll just type it in. So I'll just go on here and I'll type it in and I'll just say, oh, we know this is 35, not 31. Adjust it. Oops. Hang on. And now it's adjusted. And then you'll see that I use these, the 10-day, I keep it there so I can set that up real quick and then not have to change anything and go to the 5-minute 2-day and then do the fibs again here, right? So that, you know, this would, I'd be setting this up on a, oops, I'm not on the fib anymore. Sorry. Here we go, fib. And then I make that one a pink one. Let's see, or purplish, whatever you want to call it. So you can tell the difference between a 2-day and a 10-day. Now, I'm not going to go over the whole RV strategy. I just wanted to show you why I have those 2 5 minutes up there. One's 10-day, one's 2 days. So I can quickly set those up to trade on a 1 minute, which is over here. And you can start to see some of these where they might come into play as support and resistance levels. They're making a channel in here. That's all in the RV strategy, and you're going to want to look at that. I'm going to remove those for right now, and then it then calls for you to set historical. You go back 10 days on a 4 hour, so this is back 10 days, and then within the ATR levels, you're going to set historical data based on wicks and bodies like this. And you create channels, and this is all part of the RV strategy. Why would you do this? Well, this is where the stock has stopped or turned around, peaked and dropped off, however you want to look at it. And it's likely that there's a lot of people come in and out of the position there, so a lot of people are in, waiting to go out, and a lot of people are looking for it, waiting to get back in it, So you do that, and then you'd mark it like 4 hour. I mean, there's a lot of videos about this, guys. There's a lot of videos. But I would just go like 4 hour. And, I would have it on capital letters, but why did that not go there? Is that just under there? Is that why? Let me just do this one just to make sure. Is something wrong here? Let's see. So I wasn't even planning to cover this, but since I probably, yeah. So then it'll show you, like when you're looking on the 1 minute chart, how valid is that level? The longer time frame, the more valid that you should probably respect it. Now the book goes into all those details, where to put them, how much to respect them, when to go in and out of your trades, how to set it up, from 4 hour to 1 hour to 30 minute to the 30 minutes for the open strategy. So now when we go over the open strategy, we'll look at this layout a little bit again, so we can talk about why I have these different levels here, 15 minute, 30 minute, particularly used for the open strategy, which is day trading volume 4. But on the RV strategy, I like this, or even swing strategies, I like to look at a 15-minute movement, overall, just to see what it's doing, because I'm doing all my trading, on a 1 minute chart. So on this 5 minute, I also have the MACD and the RSI. So when I open this up, when I'm looking at a 5 minute, I can kind of look at the overall movement of the stock. And these are all the things I look at when I'm trying to judge an overall movement. It's not just support and resistance. It's not just volume. It's all kinds of things that I take into account. The overall movement of the market. Remember, I have a bunch, there's a video that shows you how to predict the overall movement of the market every day. So, these are things I want quickly on one layout. Like I said, I'll make this available. Often you'll see me just get rid of these, because if you'll notice when you have this, it does flash your account number across on these exchanges, because what a lot of people don't know is that Charles Schwab has its own, basically market is like its own dark pool. So it's giving you 2.7 times liquidity. So say this is really 100 shares here, and say you wanted 300 shares filled, but there was only 100 at that price, it would fill the 300 shares for you, even though they're not there at that price. So now if it drops past that price, then it starts to do what we call slippage, and then you get worse price, back and forth. But so so you'll see me pull those over there, just not to show my account. Sometimes it pops up. And yeah, so that's the overall layout. Now let's talk about the custom scripts that I'm working on right now. And I really need your feedback on this episode as to, is this a script that you would want? Okay, and I'll talk about what it is. And is it something that you'd like to see more data on? and then this other one here too. So let's just jump right in to what these scripts are. Excuse me. So as you know from the, if you're used to watching here, the scalping indicator has the current candlestick volume, the last volume of the candlestick, and then this changes color depending on who's stronger sentiment-wise, buyer or seller. Then it actually gives you the percentage at that any given moment, right? So, and then it shows it right here in case you didn't see that. And then here overall, this doesn't have the gray line. I must have loaded one that didn't have. There's also an average volume over 50 candles here that I have been using more and more. But what I do like to do is look at the overall sentiment. I try to read, you know, ups and downs of this and get an overall swale of the movement as an overall move. But then I'm really using this to jump on in the movement of a strong movement up or down, just in and out within a few seconds. That's why this is so good. And when you see gradual rises like this, you know you can jump in on this candle. You have more confidence if the volume goes up and the buyers were at the top of the last volume as it went up. It's like, get on that move, you know. So you're going to see that real time happening, you know. So now this is the real time, right? And there's a ticker that I don't usually, there's a ticker I'll have sometimes over here on this side, which is showing you the sales that actually happen, bid and ask. But, and then I'll just look at, like if it's a lot of red or a lot of green, sometimes I'll look at that like, oh crap, that's going to move it one way or the other. But this comes first, and then the time and sales shows you what transaction happened. You see them waiting, then you see what happened. And then immediately the candlestick patterns are formed, and then this histogram's formed at the same time simultaneously. So before you can go one, this, time and sales, this all happens before you can say 1 second, it all happens. So this is about as fast as data as you can get. Now you're on a 1 minute chart, so excuse me, so you know it helps you react to take trades on a 1 minute chart. So I was starting to show this, which has been available for a while here. I scripted this myself. Now I got this one just last week, and they were showing me, they basically copied this, and they just put it up on the top, and I'm like, no, you know, you need to add this, the bid, the ask, and the spread. And then you wouldn't have to read the market maker as much, you know, over here. And the idea behind this is now this doesn't have the columns, but if you're into scalping and quick day trading, looking around, having your eyes dart from here to here to up here to here, you know, and trying to take it all in a split second, it's hard. It's really, really hard. If you can kind of have, and I kind of draw like an egg shape when I trade. I'm kind of looking like that, you know. So the more data you have, and it's just the way our human brain works and our eyes work, right? Some people probably are better at it than others, but, you know, I like stuff to be like right in direct view, you know, right where I can really see. God, I have a horsey voice again, guys. Let me take some bottled water down here. Excuse me just a second. And not just coffee all the time. I just had the flu and then the newest vaccine booster, one in one shoulder and one in the other. And I'll never do that again because I really got a reaction yesterday. So, but I'm feeling better today, but my voice is even more horsey than usual. But I am a vaccine believer. Sorry if some of you don't, if you disagree. To each their own, right? So I really thought it needed this, and the reason why, again, I was saying, so I'm not looking across left to right, left to right, left to right, and I want my candlesticks pretty big, so they're going to take up a lot of the screen, and this is pushed over. All these things are pushed over. So now everybody can set this up differently. You might want this right on top of your, you know, above your charts, and you might, you know, so there's a way you might not want this, and it might just be one more thing. It's like, God, man, you and your scripts, you're just too much. So I'm always weighing that, you know, it's just, is it just too much to look at? The thing is once you get used to looking at one thing, it's just not that hard to add something. It just isn't that hard. But at first, if you're used to a completely clean chart, you're like, this guy's insane. This is crazy. Why would you ever do that? Why would you ever need that? And you might not. So, but I think this is the most effective indicator I have seen ever in 20 years of trading. So this is incredible. So this, no matter what, you should get. There is no reason not to have this. You say if it gives you too much data, then I guess that's your only reason. I don't know. But so now they've taken this, they went ahead with their guys, and then I jumped in and just added this. I did that on I don't know, Wednesday or Thursday last week. And I said I'd put it out for an opinion and see, do you want the bid and ask and the spread up here? I like it a lot up here for taking quick trades. Remember, we're closed now and it's aftermarket and it's kind of boring, but these all move real time, and then you can quickly glance like, how strong was it, this time compared to this time just before the candle closes? Have we gone down in overall volume? You can do it here too. It's just, I'm not going to take this away. And I tried putting these columns in here, and they're right where the candlesticks are. There's no way to not have them. So you could make them both be here, but it just looked ridiculous. It was impossible to read. So you kind of need them both, unfortunately. But this is what I really want to get your opinion on. Unfortunately, it's not moving here, but it's not officially out yet, and they're copywriting everything. So right now, I'm just getting opinions of it to see, and then it'll be made available. So so let me know about this. I think it's pretty cool myself. I'm pretty excited about it. But I'm still thinking, I'm spending more time developing custom scripts. What I don't have the time for is telling people how to load them that that can't figure out how to load them, or I do it. I will keep helping you from time to time, but they're putting out on their channel $million-dollar-margin club real better instructional videos than I have on episode 183, which is really more about loading in scripts. Layouts, but you kind of follow the same thing with the Control V. People are following what Thinkorswim says to do, and then you get a 404 error message or another, error, and it's just like, or script cannot be, or this information cannot be found, or whatever it says. That's because you've loaded it in, and you're going too far. You're following their directions, Thinkorswim, and then that messes you up. So, and there's no bug or anything like that I've ever heard of from any of this stuff. It has to still go through their system, and that's all super clean. So if you're interested in custom scripts, watch the episode 183 for the layouts. And then there, I just saw one of the ones, and they asked my opinion about loading them that they're going to have on their channel like any day now. I would watch that, before you might, if you didn't load it that way and it went in, it might be incorrect. So I would watch it and reload it, whatever scripts you have, because I know I've had free custom scripts here forever all over the place. So, but anyway, yeah, so let me know about this one, and we'll talk about the other one next, and then I'll get into the book and how I trade it. So yeah, I'm very excited about that. So let me know. Now this other one, if you've seen some of my older videos, I haven't been showing it as much anymore, but since I trade on a 1-minute chart, and you'll hear other traders talk about multi-chart alignment when you're trading. And what that really means is you're looking at patterns. And remember, that's in the Candlestick Pattern Playbook, or any pattern book if you don't like that one. I like that one. I'll have a link to it. How to read your patterns. That's the only one that rates them. It's one of the reasons I stand behind it 110%. But having patterns that align, or even momentum that aligns from a 15-minute to a 5-minute, from a 5-minute to 1 minute, when they're all in alignment, it's better for you, right? So that's one thing. That's multi-chart alignment. Like if they're all green, even the 15-minute people are going green. 5-minute people are going green. You're on the 1 minute and you had maybe a couple of reds, but now they're green and everything else is green. Now in this case it isn't. So I'd be suspect right here. But if that was green, this was green, and you just had a little pullback and it was green again, I'd be more inclined to play it green. Now, I'd also be looking at support and resistance levels and overall volume. Look, it's dead center here, so it's not really helping you with the scalping indicator. But I'd be looking at a lot of other things. But I'm bringing this up for a particular reason, because you need to know when these are about to close. Now, most people know, or there are more people that take all of their data off a 4-hour chart, candlestick chart, off this one. They make their trading decisions based on this more than they do a 1 hour, a 30-minute, a 15-minute, a 5-minute, a 2-minute, a 1-minute, whatever you might have, a 3-minute. More people will decide to go in and out based on a further back strategy, just like more people will. Now, don't do an 8-hour, because that's the same as a day. Someone did an 8-hour chart the other day. How does an 8-hour chart work? I was like, don't do an 8-hour chart. But anyway, this is a day chart. And more people look at this than the 4-hour chart and take their trades based on that. They'll go in and out based on these. So what does that tell you, right? So people are going to respect a day chart more than a 4-hour, more than a 1 hour, a 1 hour more than a 30-minute. I won't open every one. 30-minute more than a 15-minute, a 15-minute more than a 5-minute. A lot of people trade in 2 or 3-minute charts. I like the 1 minute. So they'll respect a 5-minute more than a 1 minute. So the more those all align, the more you know whatever time increment you're trading on to give you more confidence to go that direction. If they're all green, from the day to the 4-hour to the 1 hour, to all the way down to right where you are, right at this very moment, it's sort of like a, nothing but net, a no-brainer kind of move, right? Obviously, it too can be wrong. I'm not saying absolutely, be prepared, look at other indicators, but I'm just saying it's a huge advantage to know that. So you saw me mostly go off the 5-minute, right? Like if I was coming up and this was about to close right here, I'd want to make sure I knew I wasn't losing track that there was a 5-minute candle about to close, and those traders are only looking at the 5-minute chart. They have no idea what's happening here, other than, the volume will show them. But I mean, they don't see all these little candles. So they just see this candle, it's just showing it red right now, not any green at all. And look, there's 2 green right here. But because it was going down more than up, it's showing red. So this is telling you here it's about to reverse. Look, and they don't get to see that. They can kind of see it. Now, this is reading candlesticks. There's different ways. Some people don't use candlesticks, obviously, and they're yelling at the screen. There's a way to tell. Yes, there's always a way to do everything. I'm talking about candlesticks, right? This is the way I trade, and most people trade. That statistic came out recently using candlestick pattern charts. I'm sure I'm going to get emails that that's wrong. So where did you hear that? So the voices in my head. That's where I heard that. That way I'm always protected. I can always quote the voices in my head. But anyway, so back to the point. So the point is that you're looking, it's an advantage for you to know when somebody's looking at a 5-minute, in this case, a 15-minute and a 30-minute. This is all of them closing. That's a huge advantage to know that. Sure, you can figure it out if you have all those open and you're looking at them, but now you don't need to look at them because it's telling you right here, like, hey, and then this is telling you that there's a predominance of green over red. So it's interesting. This is an interesting example for this because this is red and it doesn't show the 5-minute red here. So it's telling you what's winning overall, and that's really not supposed to be the way it is. Yeah, 30 minutes green. I was just curious about that. 15 minutes green and the 1 minute's green, but the 5-minute, I would like the 5-minute to be red. So I'm going to try to fix that so you can see each one because one of them isn't completely in a line. But anyway, so let's take an example on this one. So, that's going to be hard. I don't need to do that. Anyway, the point is that the way this works, see, I'm always trying to improve stuff. You don't need to have it. What you really need to do is you need to have it closed and when they're all going to close. And then the next thing is it's telling you which one is closing when. So, every 5 minutes is going to include a 30-minute a 15-minute, and every 6 is going to include a 30-minute. So that's 6 5 minutes. And then you got a 30-minute, and here's the other 30-minute. 1, 2, 3, 4, 5, 6. As you can see, a 5-minute was there. And then every 30 minutes is an hour, and, so forth. So the more you see lined up, the more people are about to go in and out of trades based on when that candlestick opened or closed. If you didn't know that, people do go into trades when candlesticks open or close on specific times. Not as they do on prices too. They do on prices too. And I don't know the statistic who trades more on a price point or just a candlestick close or open point based on its sentiment. But I know many, many, many traders where they're probably watching their price and then they're seeing what was the sentiment of that candle that closed. In other words, was it going up? Did it close green? Or was it going down overall? And did it close red? And then they're making their choice of how to go, either get out because they're already they're in a trade and they're starting to see it turn red on a 1 hour. They're like, you know what? The 30-minute, the 1 hour, 15-minute, they're all red. I'm down $100 from the position I was, whether I've lost 100 or I have 100 less profit. And they're just like, you know what? I'm not going to ride this ride. I'm just going to get out because data is telling me get out. So they get out, and then all the people that get out affect the price and affect the movement of that candle. Or they're going to get in, and all the people that get in affect the movement of that candle. Or they're going to stay, and then the same movement would keep going. There's a lot of factors there, obviously, guys, but I'm just simplifying. Having this data is just an added advantage. So you saw that I used the 5-minute, and the reason I stopped using it is the gentleman that helped me script that through the channel, it was mostly his script, and it was slowing down my platform. It was slowing it down. And any script that slows it down, and it was long. It was a long script. So I've changed that script, and I've added all this stuff too, and it's very, very short now. And it doesn't slow down my platform anymore. So, these things have to be, even though they're not giving you bugs and things like that, they can just take so much unreconciled data constantly spinning that it will slow things down. It can't keep up with it. That's why I always recommend that you go into this collect garbage thing on a regular basis and collect your garbage. Just keep clicking this button from time to time and always collect your garbage. But there's other ways, episode 3, but I'll just briefly go through it. Charlie or Alan or somebody here will open up multiple layouts, different open Thinkorswim, not layouts, open Thinkorswim multiple times. If you didn't know, you can do that. You can open up the same platform over and over and over again multiple times. And then you can read what is the memory being taken up for each one. And what that tells you is sometimes when you load, stuff gets picked up. It's got to be at their end, right? Something's being picked up, and suddenly it's not reconciling from the day before or whatever they've got in their cloud or however you want to. I'm not a genius there, and it's taking a lot more memory to run it. So you're going to want to look to see which one is taking the least amount of memory and use that one. The other thing you're going to want to do, those ones that you load, make sure you have a fresh layout that you built that's never been traded on. You save it. You've never traded on it. You put everything you liked in it, all your custom scripts, everything. Cleaned up the garbage after you built it. Click it a couple of times. Save it. And then that's what you load every day. You don't just last loaded. So that's 2 secrets. Find the fastest one, do all that. And those two things alone, or 3 secrets, I don't know what though. If you do those things, you're going to get sensitive candlestick wicks. People think, oh, that only happens on paper trading, right? No, it happens everywhere. Now, obviously, I have no idea how. I have Cat 7 here, and I in both locations here in this state where the router comes in, I had a separate box put on the street. Like if you're in a neighborhood you can ask your providers. They'll have these big boxes or they'll be underground. I don't know where you live. And then in each one of them, there's these little router boxes that the big feeds are coming in, and then they go to a whole bunch of different houses, and then they have this meter and iPad, and they can see which house is out and all that stuff. I've watched them do it right out in my. We've come just to see, like, how do I speed up? What house is getting more? Why is this working this way? And I was asking so many questions that they just said, we can give you an individual. It's just yours alone, but I'll tell you, you'll have to pay for what they're, if somebody needs that and we don't have enough for the neighborhood, they always have like a couple extra. At this point, I haven't had to pay more, but I feel one day my cable bill for that, which might be $50, they're going to say is $1,500. I'm going to say, I don't think I really need that. But right now I've been lucky where I get my dedicated out there on the street, my own like routing box. So that probably makes me a lot faster. I don't know how to help you with that. But those other tricks I told you, and then using the cable that comes from there to wherever you're setting up in your house, I don't do Wi-Fi. I want direct cable. So I got off topic here, but I just wanted to point that out, that those are some of the things. It's one of the most frequently asked questions. How do I speed it up? How do I speed it up? And I think it has a lot. It's not so much with your computer, but that episode 3 also talks about how to get into the guts of Thinkorswim and what they require for you on your computers and stuff. So I would watch that episode 3. I probably redo that because that's like one of the very first episodes I ever made, way back when. But anyway, so this is all about these two scripts, and I'm looking for feedback of, would you like to see something different here? I think I just told you one thing I'm going to try to do. And would you like to see something here? Would you ever use these scripts? Would you like them to be available to you? And, because there's just so many hours in the day, guys. And then, as you can see here, you can see them coming up here. See them across here? There's just no price action there yet. So you'll be able to look forward if your screen is in pitch black and you can see these numbers before they fill in. And these are changing color to the most sentiment of whatever it was. So, just interesting because that, I don't agree with what it's saying there, because this is a 5-minute and it's up since it opened. It's not red, it's up. So that actually isn't working as well as I would like it to work. That's very interesting. I wonder if the 1 hour or whatever, the large farthest back sentiment is always working. What's the 4 hour? 4 hours green. Well, I'm looking at one that's back a little bit, actually. Well, I'm going to have to work on this a little bit more. But anyway, you get the gist of knowing the timing of when there's going to close is more important than knowing, exactly if it's high or low. It's just like, when are these about to close? And I look at the multi-candle. Yeah, it is. It actually is. I'm contradicting myself. It is important to know. It's certainly important to know the 5-minute, no matter what. What is the 5-minute? And here it's red, so I have to fix this. Assuming it works. It could be, too, that it's pre-market skewing here, that it's just not pre-market's harder to get the correct data, or extended market. Oh, my God. Yeah, so the 5-minute's definitely showing it correctly there. Let me just look at, we can look at the close together, guys. Let's just see. 30-minute, was 30-minute red at the close? Yes. It might be the pre-market data. Was 1 hour red? Everything's going to be red at the close, yeah. So, wow, what that thing really dropped, huh? Right at the close of market. You're like, I'm just going to hold it because I know it's going to bounce back up. I'm going to hold it long right here. Oops. It's like, so anyway, guys, that is, I'll make this whole layout available. It won't have these custom scripts in it here, but remember, if you need to load the custom script for it to come into the layout, this one, you should load this first. And there's lots of episodes that have this available. Now let's get into the book, okay? So I'll drag it over here. Let me shrink this down because you guys can't really see it, so I'll make that a little You see everything there? Yeah, you can see everything there still, including my beautiful face. Okay, so here it is. Now, this is the new book. If you've already got it, you've seen the cover of it, and basically that's that. So I'm going to kind of go down through the pages. So it goes a lot into about how video gamers, which we've noticed because a lot of our people are video gamers that have become very, very profitable trading because they have the skill set. And I think more, you see like friggin' 1-year-olds with iPads now. So you're going to see a revolution in day trading and indicators and scripts and all kinds of things every year. I'm going to seem like more and more of a dinosaur. I'm trying to keep up. So there's that. Let me go into the, all right, so here's inside the book. So I'm going to kind of go through this quick until I get to something I want to talk about. This is what the book looks like inside. It's showing you all the licensing, and it's showing you the other books that the $1 Million Margin Club has. They're very popular books. And then it starts to get, now these are all the contributors, you know, that are in the $1 Million Margin Club. Now you can get in that $1 Million Margin Club by sending, well, they have a video that shows you exactly how to do it in case I get it wrong. But their YouTube channel, does it actually have it up here? It doesn't really have it here, but it's $million-Margin Club on the YouTube, and they have a video that shows you how to get in the club. And basically, you're just taking a picture of a book you've reviewed on Amazon that's a verified review and sending them a picture of that, and then you're getting on the email list and you're getting into the club, and then you're getting books before they're released. You're getting unedited books so you can look at it, and they're asking people's help, but you're also getting an advantage because you're seeing stuff before anybody else does. So I know all these guys helped with the editing of I don't know who, but I mean, I'm assuming all of them helped with the editing of this book. So anyway, so then it is a table of contents. So you're going to recap in the beginning of the book. So I've read this book through twice. It's a fast read. As always, they're very, very straightforward and not a lot of fluff. And you can pick up on the stuff very easily because it's written more like a textbook. It's written to have a study lesson, like a study guide. That's better. That's a better word than a textbook, because a textbook would imply that it's really long in some of the textbooks I've read. But this is more like a study guide, so it really helps you. So you have a recap, and then thinking that talks about the skills to trade the open. It talks about your emotions, which I definitely was right out of the page of Mark Douglas, Trading in the Zone, and which a lot of people still aren't reading. I think it captured that really good in its own words without plagiarizing and some of the opinions of the writers. Your layouts and tools, 5 essential studies and indicators used for the charts. Now this is specifically getting into the open strategy stuff, learning the rules and applying these tools, and then examples. And then they put the 10 most common patterns that you see in the open that can help you. Because remember, pre-market and early open session patterns aren't very reliable. You got to remember 2 things about candlestick patterns, and that's in Day Trading Volume 2, is that the higher the volume, the more reliable the pattern is. And that also the first 5, 10, 15 minutes of trading, patterns really can't be respected as well. But as you start to get past 10, 15 minutes, you can see some of the longer patterns. And more people are picking up on them, and they get more and more respected. So at least trading strategies 2, 3, 4, and 5 in their strategies will work. The patterns will work, should work. I mean, are more reliable. No, nothing is for sure works, but so then that's kind of telling you what's in the book, and then like a note: do you have what it takes? And then this is sort of the recap of the Day Trading Volume 1 that has the basic skills of teaching you how to trade long and short, what is scalping. In case you don't own that book, they had to get into this a little bit, market orders and trading fees. So some people might say, I already saw all this. Yeah, but They're the people that haven't seen it. If you ever read a series of books, like I love books in series, like I read the Bob. I like sci-fi. The Bob books, the Bobiverse. They just released a new one, and they always recap in case you've never read any of the other series. So there's going to be a recap, a little bit, deciding on a broker, even a sample account, which is great, and then all the offshore people. There is some higher risk with these, which I think they give a disclaimer. Yeah, I'm not affiliated. I haven't heard of anybody losing their money on any of these that the overseas accounts and stuff, but I wouldn't put all my money in there, but they're going to give you a much better deal. You don't have to worry about the PDT rule as much, the pattern day trading rule. So it's something that gets people started before they have 25K. But just be careful. Don't, take the money out of there if you don't need it. And then you get into the basic anatomy. These are recapping things. Day Trading Volume 3. This is a great book, by the way, guys. If you don't own this, that's the book I've just been talking about, the pattern that rates them all, like a rating here. So, but this one here, don't overlook this one. It has all the patterns. Then it has all these, also has these like cheat sheets you can cut out that has them all in smaller. You can hang around your computer. This one has flashcards, which is kind of cool. But this one has all these puzzles. If you've ever been into crossword puzzles or word games or stuff like that, it does them with candlestick patterns. And boy, after you go, and you just don't mark them with pen in the book, so you can go back and play them over and over again. There's a lot of them that you have to guess what the pattern is, or it names a pattern and you guess where you find it on the chart. And by the time you do all that, you're going to really know your patterns, which is a huge advantage in trading. Knowing your patterns, huge advantage. So then chapter 2, general, I can't remember exactly what this says, but do you have what it takes? This is where it goes into the gamers. Obviously AI generated, kind of a cool shot though. Are gamers the next trading millionaires? Yes, they are. The next millionaires, because I know some of them already, and I'm a gamer myself. I love gaming. And then this is actually an overview of the strategies right off the bat, so you can see what is about to be told to you. There's 4 different strategies, and then this doesn't have the 5th strategy, but we're going to talk about it, which is in the companion book. This is going to be a pretty long video, but this is, it's also kind of reviewing the book. So after they say gamers are the next millionaire, the next message is be careful with your money. It's not just another game, like you could lose your ass. So you do need to be careful, even though it feels like a game, and gamers are really good at it because of these enhanced eye coordination and strategic thinking. But this maybe not so much risk management with their avatars, but emotional control. I was about to say joysticks, but I've seen controllers or computers go flying. Have you ever been to any of those big gaming events, the competitions? I have many times, and that you will see equipment get destroyed because people get so emotional. I mean, because they're going for big prize money, and Anyway, I used to be on a pro tour for gaming, and yeah, it can get pretty emotional. And then when trading becomes just another game, this is where you have to be careful, because you might get fooled that you have all these things and everything's going great, and then you lose the family house. Dad, I didn't know I was leveraging. I knew a kid one time who took out his dad's American Express card. He took out American Express card that his dad co-signed for him. Here's a story for you. True story. I won't name names. And then his plan was that he would max it out if he lost whatever he was doing. It didn't matter, because he would just declare bankruptcy, and he was a minor, right? Can anybody see what's wrong with this already? So it's indeed what he did. He maxed it out. And I remember getting phone calls from him about all the cool stuff he's doing. And then, your dad co-signed for the card, you idiot. Your dad's responsible for the card. Oh my God, really? I mean, dude. Yeah, best laid plans, right? Which is a pretty bad, mean-spirited shitty plan. But yeah, you could see the ignorance there. You could kind of see it, like, would I have known better? Yeah, I probably would have known better, but I'm older than him when I'm figuring this out. When he's telling me, did your dad cosign? Did your dad cosign? He wasn't answering right away. And then it was too late, by the time he talked to me. But anyway, this is a cool shot. I really loved this shot when I saw it, right out of Mark Douglas's, knowing yourself, are you bull? Are you a bear? Now if you know nothing about trading, you're like, why is there a bull and a bear in this book? This actually happened to me when I was showing the picture. Understanding risk management. So this is when you get into a lot of the Mark Douglas type of lessons that he teaches, which is good, really good, just in a different way. And there's more here. There's definitely more here. So every book feeds off another and gives you more. But one of his things I like that it kind of says it here, there's fundamental analysis, technical analysis, and mental analysis. That's one of the things, the first time I heard that was from Mark Douglas in Trading in the Zone. That is the most important thing to learn right there, which is not an easy thing. You can't just read it in a book. You got to live it. It goes into the rules, and then mastering a simulator. They had that picture in Day Trading Volume 1. This is still a recap, I think. Suggested trading plan. No, I guess it's not a recap anymore. Now you're going into your trading layout. Yes, we just talked about speed a second ago, how important that is. And then your typical layout. Now this is a lot like the one I showed you, but not exactly. These are both 5 minutes. Like that's not a 15-minute down there. This is a 5-minute. That is the scalping indicator. This is a 1 minute. And this is a little bit different than, because mine's up here across the top now. But this was definitely fashioned off of one of my, I think I can safely say that. This was fashioned off of one of my layouts that is unique to trading that I see more and more often now. But I change them because I absolutely love to build layouts. I do them over and over again. But it's basically going over what you're going to need and use to trade the open here. So that's what this is about. So, and then understanding the level 2. Again, they kind of borrowed that from Day Trading Volume 1. Yeah, it says there. I see. Then this talks about the news source when you're trading the open is pretty important. So you're going to want to know, you're going to want to check the news just on this after you figure out the stock based on the scanner settings, which we're not there yet, but they're going to have scanner settings here. You're going to want to have, you're going to want to just double check on the news. So you're basically not looking for a strong news. You're looking for like a no news, really, because you're looking for it to be consolidating before a breakout, on this strategy. I know that seems counterintuitive, but it is not. And then here's your scanner settings. And I think, from 5 to 500, you can obviously set that for whatever you want. It's large mega cap bias for sure, but it does not just work on large mega caps. Now this is shrunk down. You can see here, this is usually much wider. So they shrunk this down for the, so it would fit in the book, but your ATR should be equal to at least greater or equal to 4. So above $4 over a 14-day period. So, and that's on a day, So then it's showing 10 stocks, and then you have descending. You base it on volume that's descending. These two are key. Volume that's descending. Press scan, whatever price you want here, like I said, and then 4 days. And then make sure down here, which it talks about, you have these columns figured out. This little gear wheel here will open up. You want to have, if it's hard or easy to borrow, because the second it's hard to borrow, you don't want to trade it unless you've made a deal, and that usually cuts way into your profits. So you want to just pick the ones that are easy to borrow, and you want to pick it from the highest volume first, and then you want to go into to see if it works. And I think the book's about to talk about how to, what you do after that. So more data, candlestick. These are just basic things in case you don't know anything. You want to enter them on your watch list. In your logbook, they have logbooks for it. Studies. So these are the main studies that you'd want to have available for your open strategy. you know. So you see that on mine, I have the RSI and the MACD, the ATRs on the daily chart, the volume profile is on the 1 minute. I didn't really talk about it a second ago, but it's there. So if you don't have a custom volume, you can use the standard volume. A lot of people still just use that. They got used to it and they don't like custom ones. It's just like if you're used to a joystick, you can't go to hotkeys. You feel comfortable in a certain way. And now my cat is walking across my screen. There we go. Okay. And then you want to set this is how you set on your charts. And then you want to have the Fibonacci ready to set up, and then your support and resistance levels. And then it breaks into how you, basically where you're looking for and how you're setting these things. So there's a lot of detail about the ATR, your RSI, your oscillators, RSI and MACD, relative strength index. This is every page, guys. I'm giving you every page. In case you can't afford to buy the book, here you go. I think you should buy it. It's unless it's obviously I said I'd say that. So, if you can't make 24 to 95 on a trade after reading this, then something's wrong. So you should you'll get your money's worth just by understanding what's going on here. So this goes into volume histograms and the different types that there are of them, and how they might work for the open strategies. There's a standard volume right there. That's what that looks like. It's not custom. Yeah, these both have them here. So example of a standard volume. There you go. Yeah. And then you have the volume profile set up. This is good that they show it. The value area, value low, value high. I talk about it a lot. There's the point of control. Yeah. Yep. I haven't actually looked at it the way that it was just put on a PDF form here. So professional, this is the professional one here. Yeah. The custom, they call it a professional custom. And then the different moving averages that are there that you might have, So this is going to show you everything you need to know to set your layout up. And I'm going to give you a layout today. It's not exactly like this, I'll have to tell you. It's my own, but it's close to this. So I'll make that. I just have to remember to put a link on here today. I keep telling myself. Then it talks about Fibonacci. What do they mean? How you set them up. And then support and resistance levels. This must be the end of a chapter, right? Okay, so I said missing a page. And then learn the rules for applying your tools and studies. So it's really walking you through step by step here. And then a detailed understanding of the 4 open strategies. Okay, so now we're into the open strategies. Okay, this is where I kind of wanted to stop a little bit. Okay, so this is strategy number 1 and number 2. Breakout ranges are on this page. Remember, we're looking at 2 pages across from each other. So this is a 5-minute chart, and it's showing you on the pre-market from 7:30 to 9:15 where's the highest and lowest bodies, not wicks, bodies. Now it tells you about this in detail throughout the book, but that's where you want to market. That's your breakout range now. So you want the price action to break out of this in order for you to trade it. And then this is the one that's on the last 30-minute candle that closes at 9. This is another one that has a breakout range. These are 2 different strategies that are based on pre-market levels. This is a 30-minute chart here. I'm glad that they put that in there. I think there was a lot of good editing because the first one that I saw didn't make this so easy. So good job to you editors out there that were recognized in the beginning of the book. And then this is number 3. Again, the close of the body of the first 5-minute candle. Now that's your breakout range. So a different strategy. And then this is the 15-minute chart body. The bodies of the 15-minute chart, high and low. That's your new breakout range. So those 4 strategies differ primarily on how long you can trade them and where their breakout range is. Everything else is the same. So I'm trying to remember. I'll figure out as I go through it, but I'm pretty sure it's all the same. So that's really cool. That it's so easy to understand. And then here's your scanner specifications that we talked about before. Scanner specification to find stocks for the open strategies. Yeah, so we already showed that. I don't know why that's being shown again, but I think one was just how a scanner works. And this is specifically telling you what I was kind of already explaining to you. And then this is the actual formula to set your ATR range. And we didn't actually talk about that yet. Does that show that there? No, but it's going to. So it just talked about the different strategies. It's about to tell you about the ATR here. Yeah, here you go, ATR. Now this is named on this Day Trading Volume 4 rather than just ATR levels. Now remember, I got a big long email, so I've been saying this for a while in my videos. I understand that the average true range over a 14-day period is one number. Yes, I get that. But what so many strategies call for is for you to divide that number in two and get a high and a low so that the center of it is recognized. And where that center is changes a lot depending on when you do it. On this strategy and the RV strategy, it's the previous close of day, the previous close, right? So you're taking that 119.32 and that's the close of day. And then you're taking the ATR over that 14-day right there, period. You're dividing that by 2, so you got $2.16, 16 or 17 cents roughly, and then you're doing it. What did it say it was? $2 and divided by. No, it hasn't. It didn't say the amount here, but for example, it didn't show you what the answer was when you divide that in 2. But anyway, you divide it in 2. And then you subtract half to get the ATR low, and you add half to get ATR. So now you're creating 2 numbers of ATRs, not a single. So you've made that single number into 2 numbers, yes. Somehow I've been saying that incorrectly, and somebody took great offense to that, but whatever. I'm not perfect, and they always say, you're a math teacher, you should know better. Yeah, I should know better. You're probably right. I make mistakes all the time, though. So, you know. And then this is a new thing that, if you recall when I was trading this is a new integral part and so important to the strategy. I don't want to make it sound like when I say, oh, it's a new thing. This is the important step, right? When you guys were trading along with me before this happened and we were beta testing this, right? We were having trouble finding stocks that you could trade. You were talking to me about it in the chat and emails. I sit all day. It never breaks out the range, you know. So now there's a way to get your odds a lot better, and that's with this volatility rating. So basically, you're able to take from your ATR high and low, what we just figured out. You're dividing your breakout range by your ATR range. And you're trying to get a percentage there that's less than 25%. Most of them are less than 10%. And that means you have and that'll be of this thing. So it's going to be a very tight breakout. If you have a stock that's like 60% here, that means your range is so wide, your breakout range, you may never see it break out. So this was added to try to narrow down where you could find your stocks. Very, very important. So far, since I've used this volatility measure, I've always found a stock. There's not one single time it hasn't broken out. So, you know, maybe I've just been wicked lucky, but this solved the problem. Now, there's been many that I disregarded because they didn't meet this. Yes. So that told me which stocks to disregard. So very important, guys. Very important. And then it goes into how to mark your 2-day and 10-day Fibonacci's, which I think I showed you a second ago in detail. And then it starts, now it's talking about where to mark your profit and pivot levels. So now on this strategy, it's different than the RV strategy, right? You're only marking your profit and pivot levels between these 2 ranges. Now the wording profit and pivot level has come up. They're not called support and resistance anymore. They're called profit and pivot because you're not, you could look at it like a support after it breaks through it or a resistance before it does, but the true way to trade the strategy is the best way, safest, most conservative way to trade it. The second it breaks a profit pivot level, take your profit and get out of the trade, and then follow the rules to get into your next trade. That is the surefire way to make money. That is the way everybody's been telling me they've been making money. And it's been really well, 80, 90% accurate. I kid you not, guys. Try it, trade it, be careful, do a sim first. I am giving you advice, so I remember. I read this disclaimer. I should tell you, I just had the 4th lawsuit against me. 4. So you wonder sometimes. I wonder. I don't want to get bitter or negative here. I had a friend of mine used to use it all the time. The most cynical friend that I've ever had. And his favorite phrase to me, because I had a sort of attitude about, I was a charitable sort of personality compared to his. I'm sure not as much as other people. And he would lecture me, no good deed goes unpunished. No good deed goes unpunished. That was his favorite line. And when I get the 4th lawsuit now against the Day Trading for Success, which is just, it's almost comical, because it's just, for so many reasons. If you read the disclaimer, there, I basically am completely insulated from anything. But that doesn't stop people. That doesn't stop people from trying to call out the most obvious of obvious, or if they lose money or whatever. It just doesn't, I don't know. Anybody can sue anybody over anything. What are you going to do, right? But I will say it's taxing. It's taxing. I have an attorney on retainer, so it costs money for them to lose their lawsuit against me. And it's just stupid. And unfortunately, it has to be done. So I'm not going to go on any further than that, other than I could stop recording and stop doing things. But there's a part of me, even if I felt like doing that, because I was just exhausted of it, there's a part of me that would say they're winning by allowing them to beat me up in that way, in the most illogical, hateful way. And these people are hateful too. And it's like, I have nothing to do with what goes on. If they're losing money, then it's on them, which so many of my friends tell me, like, dude, and I'm not going to self-praise, but I mean, I do everything I can do to try to have them protect themselves. And then in the end, if they can't do it, they're looking for somebody to blame that besides themselves. They need to blame them. Look in the mirror, because you can't, and that just tells you a little bit of something about their personality. I am getting a little bitter here, sorry, but just like, come on, seriously, but whatever. And I'm sure what I just said right now will be in some transcript in one of their lawsuits. But whatever. You can't stop anybody from suing. Okay, back to my points. I'm sorry. I do go off. So now we were talking about profit pivots and how they should be inside the ATR levels. So as you can see, you're marking them. You start to mark them right above the pre-market breakout level, which has been marked. We just see that they did mark those there, right? Yeah, so these are marked, right? You can mark them any way you want. They have them as dashes here, right? So then once you go look for historical data above and below these lines. So let's go here, and you can see it's kind of hard to fit this all on a chart, so they have trouble. I can see this, but this is the high mark, right? And I'll bet this is the low mark, so they divided it up. So this is basically the same. Is this the same stock? MU. Yeah, it is. Yeah, this is the same stock on the same day, right? Yeah, okay. So this is just a vision of it below, which we can't see here, below the pre-market low, and this is above the pre-market high. So basically, by going off over to the left, they were able to find areas where the candlestick bodies and wicks turned around. So, okay, so yeah, they showed it right here. I'm sorry. So they did show it right here. So some of these are further away. We can't see here, but hopefully they're going to show us these. So it's probably on a much reduced chart. So you're looking for things like that. See how clear and defined that is for a profit-taking level, right? And then they're showing you different trade levels here. Let me just see. I'm having trouble following this. So if I'm having trouble, example of profit pivot levels, average breakout range. Okay, profit lines, pivot levels confirmed. Once you mark the breakout range, no strategy trade to remove the profit pivot levels from the center. I know that. You're supposed to take them out of the center because you cannot trade between the pre-market high and pre-market low unless you're breaking outside the rules. Okay, so yeah, this is just showing you where these were marked, which is further back here somewhere. They got confirmed by it tapping. Look at how many times it tapped. So they're just showing you as it goes across to the price level how many times it was confirmed. So you're looking for areas that were confirmed. Let's go to another page. Hopefully it gets more clear here. Example. This is another. So that was the one from pivot range. Doesn't say what strategy this is right here. Mark your profit pivots from ATR between your ATRs. This is just a general. This is just generally showing you what to do. Okay, that's why I'm looking for specifics. And then this is your first strategy showing you. Okay, so there's your pre-market low, and now it's showing you. There's your breakout range is 99 cents. So that's what you would divide this by your ATR range to get your scan to make sure you're getting the right stock. And then these are more specific way. I'm sorry, I wasn't more prepared for this, guys. But it is very clearly laid out here. It doesn't seem like it the way I'm presenting it, but let me just scan forward a little bit. I'm trying to get to an end faster than what it's taking you step by step through this, and I was like trying to read it as the end, you know. Like these are the rules here that we haven't even gotten into yet, and that's basically this is as the price action breaks this profit level going up and it passed the candles open in the direction of the trend, it is a signal to buy. So this is specifically talking about after you've broken the breakout range where you could get in it again. Now you start treating all these profit levels as a new breakout range. So you're waiting for it to break it. But if it started here and opened here, then the candle opened. Although the price action may break this profit level going up, it is not past the candles open in the direction of the trend, and a trade should not be entered here. So this is candle open. Sorry, I'm having trouble understanding what they just said there because that could theoretically be green there. That's the close. Only take positions above the high of the breakout range and short below. Are we below or are we on? Oh. Are we below the breakout range here? No, pre-market high. Range and short positions below the breakout range. What am I missing here? Sorry, guys. I want this to be so clear and concise. I think I have to read the whole page, and I don't want to like keep you hostage here. Anyway, there are details of the rules right here. And here they are right here. Only take trades when the price action passes through. It just seems like this could have shaken you out right here. I'm having trouble with this pivot level right there. So open, close. Open, if it opened right here and sprang up, it would be green. Break this profit level going up. It is not past the candles open in the direction of the trend. Oh, okay. Not past the candles open in the direction of the trend, and the trade should not be entered here. That's just not right. I'm sorry. I'm having trouble with that. I must be missing something fundamentally here in this book. I'm going to have to come back and visit that on my videos with you guys. But how I trade this particular area here is, so if it opened here and it was opened red, I would already be afraid. If it went down first and then went up, I would be afraid of taking that trade. You've seen me trade. I often would wait till it breaks the next line. But I'm not sure. It seems like there's a mistake made here, but this could just be me. I'm just having trouble with it. Give me some feedback on what you see here, guys. That would be helpful. But I know how I trade it, and I know what they're trying to say. It seems like their example isn't quite correct, though. But it could be just something stupid I'm missing here. This is one of the fundamental things about the entire strategy, so I don't want to be all jumbled up. So basically, once it breaks the breakout range, you can take a trade, and you should get out at the first profit level. So here, you can't trade the first 1 minute. So here, it broke that level. You get in, you could take profit right there. Here, you could have got in, and you would have taken a loss, either halfway down the candle or your max loss, right? Here, you're opening right at the level you're probably getting in. You could take profit either here, you could hold it, take it here, here, or here. So I just looked at that again to make sure I wasn't making mistakes. So what I do a lot of times is I'm looking at the other indicators, and I might decide to hold it, and then if it gets through here, I'll probably really be holding it and just riding it as far as I can possibly hold it until it reverses and comes either, back through like that line, either that line or that line. Then I'll take my profit. So I know I'm going to be green no matter what, but I'm just riding it for the most green I can get. Here again, it breaks this. You go all the way up here to this profit level. So you only trade high, only trade long above the breakout high, and you only trade short below the breakout short. Following those rules, it's pretty hard to lose money, I will tell you. You're always saying to yourself, I left money on the table. I could have made more. I could have made more. But just think about what you're saying right there. Two things. How good does that strategy work if that's what you're saying? I could have made more money with this fantastic strategy, And then secondly, it's like you're upset. You made money, but you're upset. It's like, take the money and run, guys. Yeah, you don't need to. Now, if you want to be a risky guy like me and hold it, then it talks about how you can do that. But that's the basic essence of, besides the way you set it up, how you trade it. And I know it goes into a lot of details about that here. And you're watching the other indicators at the same time, of course. As this is happening, this is not their only example, I'm sure of it, is you're watching just to make sure that everything's verifying. There's no one single thing. Then they have the summary here. So let's take a look at this together. Make a trading plan that maximizes your maximum loss per day. So I really do that. And I basically trade this via max loss more than halfway down. That's me. I do max loss not more than halfway down. So I might let it go when they say to get out, because I'm okay for it to go max loss. I'm playing the odds that I'm going to be okay with that, but that's not what it says to do. Decide on after you've done a plan, decide on the open strategy you're going to go with today. You can always change it to a different strategy as the time moves closer or into the open session. Find at least 3 stocks using the predefined scanner settings. Right. For the best results, determine on a daily chart that these stocks have moved in a consolidating pattern. Okay, let me go just to give an example on that. What that means is, like, where this candle closed, okay, right here, you would want to look back 10 days. How many of these candles touch that? This candle here, this, at least from the close to the top. So you've got 1, 2, 3, 4. Well, yeah, this one hit it. 5, this one hit it. 6, 7, all of them. So Tesla would be so good to trade the open strategy. I've been trading it with 2 or 3 or even less than 4, and I find that it's good. We use the volatility meter, but that's what it's saying. You're looking for consolidation, because then the breakout is a short-term breakout. That's all. I mean, you're just trying to make a couple hundred or a couple thousand in the morning in 15 minutes to an hour, depending on which one you pick, and that's it. So let's see. So daily counter with the price. Okay. For the best results during the time the stock has moved in a consolidating pattern over the last 10 days, meaning that the open and close of the last daily candle intersects with the price action levels of as many of the previous 10-day candle bodies as possible. We just showed you that. This I just showed you. I'm speaking as though there's more than one of me. This will offer multiple pivot profit point levels to identify. And that's what will happen, right? As you go back on the 5-minute chart to look for profit pivot points, there's going to be all this action because it has moved past that day's price action so many times. So then you start to look for like the best possible consolidating areas that have touched the most time. A little subjective. Either sharp turnarounds on a tall turnaround wick or multiple taps that are almost at exactly the same level. Those are really good profit pivot points. People have asked me that question, like, how do you know where to market? There's so many to pick. Well, I mean, nothing's for sure, but the more price action spots means that's the more people that are watching that level. It's historical data, guys. They're watching that level. So multiple levels. The further back you look on a consolidating pre-market pattern, that should be, then further, God, I was going to say, this is a typo. Then further, look for a consolidating pre-market pattern that should be less than half the price action up or down of the previous day's ATR. This will provide you with the best possibility for a short-term breakout of all the open strategies. Now, even more so, that's a quick one, is to do half that of the ATR price action up and down. But then you can use the volatility meter rating as well to make it even tighter than that. That was the previous way it used to be done. So let me just make sure that it does talk about, does it talk about the volatility here? Determine the stock breakout range, range. Remember, these only price throughout the breakout range. Watch for studies indicated. Watch closely. Seriously? I'm finding problems, guys, that I'm going to make sure I pass on. Where do you look for a consolidating pattern? Sorry, I'm just trying to, it should be less than half the price of action down the previous day. This will provide the best possibility of a short-term overnight strikeout. Do I have I might have an older copy of this. Give me some feedback on this, guys. It should talk about the volatility meter right in here. Did I just read past that? Multiple different, look for the half. That's how we used to do it before they corrected that. Strategy, enter stocks, best 10-day, mark the ATR revenues, considering best set day T. I'm not reading over, right? Sometimes I just blank and read over the same thing over and over. Oh, here it is. I'm sorry. Okay. An example. For open strategies 1 and 2, you should determine the volatility rating as soon as possible. So the half will work on the other one, so you still got something. But to make it tighter, God, it's right here in front of me the whole time, and I just kept reading right past it. Here it is right here. It's the volatility rating. I'm not exactly giving a seamless description of how to trade this on here. So work with me, people. I'm trying. But I'm trading it and making a lot of money. So, this is an example why you should buy the book yourself and not go by the professor's description of what he's reading here. So, but hopefully you're reading it along with me, screaming at me, raising your blood pressure. I like the whole Wizard of Oz thing here. Okay, these examples provide a clear pathway to success. Okay, open strategy 1. So now it's showing you where it marked the profit pivot levels. Well, some of them anyway. Low levels should be marked between here. So this is just okay. Yeah, and I was going to say this is an example. And then a close-up of what it might look like for just the pre-market. And then now you get into actual trades and how they're taken. Okay, weird. This, just as far as an editing standpoint, this page should have this page across from it because that's the description of those. And maybe this PDF that I have is not right. I'm hoping that that's the case because it's easier to read them because this is describing all these trades. So I'm giving a little bit of a review I'm going to just tell them, watch my video. They'll have to sit through the whole hour video. But yeah, this should be across, in my opinion, even if there's a piece of artwork here or something, just looking from an editing standpoint. I'm sure others have said this too. It could be that this was just downloaded incorrectly for me to look at. So, but this is giving the win rate of this, 66% win rate. So in case you don't know, if you're acting like that's a bad win rate because you don't understand day trading, you would be wrong. This is phenomenal, this kind of a win rate in trading. It means you're making money 66% of the time. And unless you're losing more money than 34% of the time, right, then you win 66% of the time, meaning you have a terrible win to loss ratio, then you're going to be making money. You have made it. You've done it. So if you just followed the rules like they say to do, 66% win rate. That's incredible. That's phenomenal, right? So it comes down to your day trading plan and your emotional control of trading by the rules. So I can tell you, to this point, I have never seen a strategy with that big of a win rate. Never. Not even the RV strategy. And I can also tell you, this is old data. It's better than this. So again, I am not a financial advisor, but simply follow the rules in a simulator and see what happens. I'm just so excited about this strategy. I should have said that. Most of you probably aren't with me anymore, but most people don't watch all the videos. But I can tell you that I've never seen a strategy that you're more guaranteed. I hate to use that word, but every trader trades differently. Every trader has to be in control of themselves. I'm just talking about if you traded it like a robot, you did it like a robot, and you weren't affected by emotions, there's your win rate. That's what this pattern shows. So this just took a pattern, right? AMD, right? It just took a pattern and said, hey, look what happens if you trade it like it said to trade. And that's what happens. And then it explains each trade here. So, it's just like, guys, come on. Open strategy 2. Wow, so all of them aren't across from the descriptions. That's just got to be something that's wrong with the set that I got here. So open strategy 2. This one is also a 66% win rate. I'm hoping that seems very odd that it's exactly the same. I'm hoping this isn't a typo. Let me just go down here for a second. Okay, that says 61. Okay. Just like, really? Did you guys just keep 66% everywhere? 14.7 losing 300 shares. So this had a $768 profit with $105 in losses. This one had a 255 with a 36. So it depends on your share size. Oh, it just was less, same share size, just less trades, I guess. But you still made big money, a couple $100 in a few minutes. And then this one is you made over almost $600 in just a couple of minutes. Over $600, right? Yeah, over $600. $653, and this one is the same. It's just telling you when to go in and when to get out. And then the next one, and then how that these should be across. They must be across from each other. Then open strategy number 3. These are each different strategies. Oh, this one had to set up the chart twice because it's the 5-minute breakout. Sorry, I'm just looking. 5-minute open session breakout. I know how this strategy works. I'm just having a little trouble following the. I think I got a PDF that's messed up. So this one is 255. This is the worst day. We only made $150. 61% win rate. These are all with 300 shares. It looks like. But still, on a day that isn't that good, you still made some pretty decent money. Open strategy 4 now. Laid at where the Fibonacci's are, where the profit pivot points are. This is the 15-minute breakout. They had to put it through 2 different charts. 66% win rate, and you made $207. Wow, not bad, guys. I mean, now you could raise your share size obviously and make more money. Oh, that's it. Okay, so that's showing you. That showed you all the strategies. So. But best thing to do is go in a sim and trade it yourself. Now, these are some of the better patterns that you'll see, patterns that you'd be more likely to see in the first hour and a half of the open. And then they have a conclusion. And then it's cool that they do have daily guidelines with what a professional trader might write in. Oh, it looks like they based it on perhaps the actual stock, that they were trading here on some of those examples. It looks like it anyway. Maybe not. I don't know. And then how you fill in your log sheets Don't forget to give these people a review. My God, please, so they make more books. I really want the book out about swing trading. So then this has got a whole bunch of log sheets in here, and then down here, I think. Let's see. There must be the glossary. Oh yeah. Then you can keep track of a whole week here. And then your glossary of terms that are specifically about the open strategy, and then some notes and reminders. So now let's take a quick look on this long video about the companion book. So here's your companion book that has the 5th open strategy. If you're still with me, thank you for staying with me, guys. So that's what this looks like. And start at the top. So yeah, this is mostly all going to be log sheets and daily plans. So they have a legal notices, and then the other books that they sell. Got to have the advertising. This is your book of contents here, and then does this someplace in here it has yeah, because they have the authors page with Amazon. They also have a website now that's really cool. I looked at. So does it have the website here? Let's see. Why isn't the website here? Maybe they hadn't made it yet. Oh, there it is. Okay. Yeah, something with the PDF makes lines dark here for some reason. I think once these get bigger, they're not dark like that. They've got the YouTube channel here, the website, and all that stuff. So you should definitely check those things out, and not just go by what I'm saying here. So now what these companion books usually do is they give a recap of the book very, very briefly, because they just want to give you lots of log sheets. What was different about this, though, is the day trading, strategy number 5, the open strategy number 5. So here it is right here, called the Holy Grail. So there's the same rules. So basically, my understanding of the open strategy number 5 is that, and I haven't had the time to really trade as long as they're suggesting here, but what I've gathered from it, and correct me if I'm wrong for those of you that have been trading it, is that as you pass strategy number 4, you use those breakout ranges as support and resistance levels, except the tightest range. So you use the tightest range that you can't trade in between strategy number 1, 2, 3, and 4. That becomes your real breakout range. And then you get rid of the dashed lines on the other breakout ranges and make those your support and resistance. You keep the Fibonacci's and you move forward. So let me just see if they say anything about that. I think these are just a recap of the other strategies. Yeah, strategy. So you might want to have these just because it's easier to follow. That's strategy 1, 2, 3, and 4. Open strategy 4 shows the narrowest breakout range of the 4 open strategies, and all the remaining breakout levels either removed that are in between the narrowest range. Yeah, you got to remember, when you figure out the narrowest range, get rid of any other line other than a fib level that's in there, because there'll be lines in there, and then or change to profit pivot levels outside the range. You can only you can trade open strategy 5 for the remainder of the open session. In other words, all day. So the back testing is all day for trading 5 with a high probability of profit. So that's pretty cool that now it's developed from open strategy into an all-day strategy. And again, the key to that is I almost want to call it ridiculous thing, which is you only trade long above the breakout range and only trade short below. Now, a lot of traders only trade long, and they would never even conceive of trading short. They don't even understand what shorting is. It's a scary thing to a lot of people. And I'm not trying to make fun of it. But so what that really means to them is they have a level that says never trade long below this level ever, even if the price action is turning around. So that's how that helps you doing that. If you trade both long and shorts, then you still have that short, you have that breakout range to tell you what to do, which it seems almost ludicrous, but it really works well. And again, the biggest complaint I get about that is I'm leaving money on the table. So that just means you're not making as much money, not that you're losing money. So that's not a bad critique. I haven't had a critique that says I'm losing money on it, so that's pretty darn good, guys. You just don't get strategy. It goes into the volatility rating again, and then guidelines. So it doesn't have a lot except the fifth strategy with details about that. But then you want to be able to log and everything. So that concludes the two book things, guys. Remember, to recap quick, give me a feedback on what you thought about these. Would you like to see them? Would you like to see changes? Any feedback on the book? Remember to join the $1 Million Margin Club. You go over there. There's a video that says how to do it, but they're basically asking for you to review their books to get into the $1 Million Margin Club. So it says how to do it. It's like join the MMC to their email address. And then I'm going to remember right now to make to give you a copy of this in here. It will not have these custom scripts, so don't start sending me comments. It's not there. So okay, guys, listen, thanks for watching. I hope you enjoyed it. I'll be showing you more live demonstration videos soon. Be careful out there. Always stay inquisitive. Learn from everywhere. And go green.